Hello guys, welcome back PSP Source. Today we are going to see valuation of goodwill. So meaning of goodwill is goodwill means good name or reputation of the business which attract more customers and therefore helps in earning more profit in future. And it is an intangible asset, not a fictitious one. Goodwill is valuable asset if the concern is profitable. On the other hand, it is worthless, which means valueless if the concern is losing one. Say for example, just assume that character Mr. A purchasing a business B for rupees 15 lakh. 15 lakh, but the original price of the A's business is rupees 12 lakh. So that extra 3 lakh called goodwill. Let me clarify. If I am purchasing an assets more than that of the original price, that is called goodwill. Okay. So I have mentioned two authors for defining goodwill. Lord Macnaghten defines when a man pay for goodwill, he pays something which places him in the position of being able to earn money than he would able to do by his own unaided efforts. Next, J.O. Maggie said, the goodwill defines the capacity of the business to earn profit in future, especially what it means by goodwill. Next, I have prepared method of valuation of goodwill chart. There are four methods. There are four main methods of goodwill. First, simple average method. So simple average methods comes under average profit method. Average profit method has two sub methods, that is simple average methods and weighted average method. The second method of goodwill is super profit. Third method of goodwill is capitalization method. Fourth one, annuity method. So as I said, average profit method again divides into two methods, that is simple average method and weighted average method. And capitalization method further divides into two methods, capitalization of average profit method and capitalization of super profit method. Let's see its explanation one by one. Okay. So here the first method of average profit method is simple average method. The simple average method is straightforward. Make it is useful for business with relatively stable profit. Here stable profit. Stable profit means let's assume if I am running a business. If I am running a business with rupees 50 lakh I am earning for first years. For second year I am earning 52,000. For third year I am earning 53,000. So here the volatility of earning is not deviate, is not much more. The deviation of income, the volatility of income not much more. So here the incomes is in the range of 50, 52, 53. So this is called stable profit. So we can use simple average method when companies earn a stable profit. Okay. So here are the formula for simple average method. Goodwill equal to average profit into numbers of years of purchase. So numbers of years of purchase means that average profit expected to continue in future. Okay, average profit that is expected to continue in future, that is called number of years of purchase. Okay. Average profit equal to total profits divides number of years. Follow this, we'll discuss the purpose of using simple average method. The first purpose is it helps to ensure that the buyer pays a fair price for the business, which means we can identify correct price of the business, especially when we are purchasing another business, when we are done with acquisition merger, so that time it helps to ensure the buyers fair price of the business. Okay, next, to maintain strong supplier or distribution relationship. Third purpose is this method helps the buyer or investors evaluate how much extra income generated over a time. So investors, you know very well, investors means those who are investing in business. So investors can determine how much additional income has been generated over a specific period of time. So this method helps to know how much extra income we will get in a future with specific period. Fourth purpose is it ensures compliance with accounting standards like IFRS and GAAP. So it ensures the rules. Compliance means rules and regulations as per international financial reporting standard and generally accepted accounting principles. Fifth purpose is it helps to potential investors means those who likely to invest your business, those who are interested to invest in your business, they are called potential investors. So this method helps to helps to know how much return they'll expect, they'll get in future, how much returns they'll get in future. They need to know what is the exact price. So simple average method helps to for investors to determine what is the price they're getting in a specific period of time. Next, second method of average profit method is weighted average method. This approach is particularly useful when the profitability of the business has been inconsistent. Inconsistent means now only I said inconsistent means when I'm earning for first year, say for example, for first year I'm earning 1 lakh. For second year I'm earning 70,000 for loss. Not earning, I'm suffering a loss for rupees 70,000. For third year 30,000. Here the income is not consistent. The volatility is huge. That means inconsistent. So weighted average method is suitable when we are facing inconsistent profit. Inconsistent profit. So this approach is particularly useful when the profitability of the business has been inconsistent or shows a trend increasing or decreasing, which means more volatile over time. Weighted average profit ensures a fair, trend-sensitive valuation of goodwill, which is critical for reliable financial decision making. The formulas of weighted average method is goodwill equal to weighted average profit into number of years of purchase. Weighted average profit equal to sum of profit into weights. Divide sum of weights. Okay. Once we solve the problem, it will be more easy for you. It will be more understanding. We'll work out in our next videos. Okay. Next, we'll discuss the purpose of weighted average profit. The first purpose is reflect recent business performance. Weighted average profit reflects more accurate of financial statement. The second purpose is adjust for trend and profitability. Trend means profit or loss trend. If we face profit or loss trend, let's assume if we are facing profit trend, then weighted average ensures reasonably higher profit. On the other hand, if the profit trend decrease constantly, then weighted average gives more on conservation value of goodwill. Third one, provide fair goodwill valuation, which means it gives more realistic value of goodwill, and also it avoids over and undervaluations. Okay? Hence, weighted average helps to buyer or seller when merging or buying and selling occurrence. Fourth purpose is accounts for profit fluctuations. I already said Weighted average always used when we are facing inconsistent profit. Fifth one, common in dynamic industries. Dynamic means changes. So dynamic means changes. Changes occurring in markets or technologies. So weighted average helps us for facing these dynamic changes. Next, we'll explore super profit method. Super profit measures the extra earnings of the business beyond the normal or expected profit generated by similar business in the same industries. Super profit means excess profit. Excess profit earned by the company beyond its normal profit. For example, if I set a profit benchmark of rupees 1,50,000, but actual profit I earned for rupees 2,50,000. The excess of 1 lakh called super profit. Okay. Formulas are goodwill equal to super profit into years of purchase. Super profit equal to actual average profit minus normal profit. Normal profit equal to capital employed into normal rate of return divided 100. Okay. Next, purpose of calculating super profit. So first purpose is business with super profit are seen as more valuable because they generate additional earnings. Through super profit, a reputation, loyalty raised among the customers. When we are earning super profit, automatically leads to create goodwill among goodwill reputations, loyalty among customers. So that second one, comparison with industry standards. This method also helps the business to evaluate its performance from its competitors. If I earn super profit now, it indicates, yeah, of course, I'm running a business with healthy. Third one, business acquisition and merger. For third objective is business acquisition and merger. If we need to purchase a business, suppose, then then super profit helps to know how much extra we have to pay for that business goodwill. As a buyer, I need to know how much I want to pay for that goodwill. So this method helps to know how much super profit I have to pay for that goodwill. Fourth one, it helps investor to assess whether a business generate returns or not over a fixed period of time. Next, performance evaluations. Performance evaluations. If a company generating super profit, then it indicates what? It indicates I'm running a healthy management, healthy operations. If it is not super profit, guides or ways for improvement. Next, capitalization of average profit method. Second one, capitalization of super profit method. Now we look at capitalization of average profit method. It is used to value the goodwill of the business by comparing its actual profit with the profit that could be expected, which means it helps to know present value of future income through company unique advantages. The formula of capitalization of average profit method is goodwill equal to capitalized value of business minus actual capital employed. Capitalized value of business equal to adjusted average profit divides normal rate of return. Actual capital employed equal to total asset. We can take all asset except goodwill, less outside liability. Okay. After this, we'll explore the purpose of using capitalization of average profit method. The first one, to value goodwill objectively in normal course. Second one, to reflect true earning capacity, which means we can assess whether our earning capacity is based on tangible or intangible asset. Say for example, I'm earning profit of rupees 1 lakh. for its reputation. Then it means our earning capacity is more linked with intangible asset, not with tangible asset. Okay, so to reflect true earning capacity means whether it linked with that earning capacity linked with tangible asset or intangible asset. So here capitalization of average profit method helps to know whether it linked with tangible or intangible profit. Third one, for fair valuation in business transaction. So this fourth one for valuation of business transaction. Fourth one, to evaluate competitive advantage. Fifth one, for mergers and acquisition. So under this method it is more suitable when merger or acquisition occurs. Sixth purpose, or to identify the contribution of intangible asset. Now only I said in second point, it determines earning capacity, whether it linked with tangible or intangible assets. Okay. After that, we'll discuss capitalization method. Second method of capitalization method, that is capitalization of super profit method. It determines the present value of business extras earning capacity, that is super profit, which means it also helps to assess how much capital required to generate to get super profit at the normal rate of return or expected rate of return, including risk level. So formulas are goodwill equal to super profit divides normal rate of return. To reflect true value of intangible assets, this method helps to value tangible benefits. Second one, for fair valuation of business. So here capitalization of super profit method helps to assess additional earning capacity during buying or merging actions. Third one, to measure competitive advantage. Fourth one, for long-term financial decision. Fifth one, widely accepted and logical approaches. Last but not the least, method of goodwill, that is annuity method. Annuity method, called super profit as an annuity earned over a specific period of time. This method factor in the time value of money to estimate the present value of super profit, which means annuity method helps us to calculate present value of expected super profit over a limited period. Say for example, I'm running a company having patent. I'm running a company having patent, right? And that patent gives me competitive advantage. But later that patent will expire, then our super profit automatically decreased. So annuity determines the present value of expected super profit over a limited period. I hope you are understood. The formulas of goodwill here: goodwill equal to super profit into super profit equal to actual average profit minus normal profit equal to capital employed and normal rate of return. The purpose of annuity method is incorporate the time value of money. This method recognizes future cash inflow less, but money earned today is worth. Second purpose, or accurate valuation of future earning. Third one, for fair business transaction. Annuity method ensures correct value of future earnings for specific period, as I said in introduction slides. Fourth one, to reflect finite earning potential. Finite means it will be end up with specific period. to reflect finite earning potential, which means super profit will not exist for long period. It will end up with specific period. That's what I said. Fifth one, recognize in modern financial practices. Nowadays, annuity method widely accepted for valuing goodwill. I hope this will help you for your studies. Thanks for watching and keep support for more videos.